Hi guys, this is Sec3. Welcome to a new video of my Forex trading course. I hope you're enjoying the course so far. In this video, I'm going to be talking about flag formations and, of course, the breakout of those flag formations in order to score a profit whenever possible. I'm going to make this video definitely not as long as the previous ones, the ones going on the range, on the ranges and triangles topic, because most of the trading principles apply. Okay, at the end of the day, a congestion area is just a congestion area, no matter whether they take the shape of a triangle, range, or a flag. Okay, so most of the trading principles we've reviewed in previous videos do apply to flag formations. So what I'm going to be doing here is simply, I'm just simply going to lay out the what a flag is, what type of patterns or what type of price conditions we want to be searching for, and then you will be able to apply the same principles, like I say, the same trading principles you've reviewed on the previous videos. Okay, all right, I'm gonna be showing you both a bearish and a bullish flag formation. Both of them are equally tradable. The only difference is, well, whether they take place on an uptrend or in a downtrend. Okay, I'm gonna be begin with a bearish flag formation. In this case, I'm showing you a clear downtrend on the CAD against the JPY on the 4-hour time frame. A bearish formation, basically it's a flag upside down. Okay, this is the flag I am talking about, right there. Actually, let me mark it with proper trend lines. Here we have the flag in itself. It's basically a retracement channel. 1 second, I'm gonna try to adjust the trend lines as much as possible. Okay, right there. Here is the upper part of the retracement trend line or the flag, of the retracement channel, and here we have the pole of the flag, which I'm gonna mark in, let's say in green, for example. Okay, so basically a flag formation in a downtrending chart such as this one, it's basically one whole swing. Okay, the pole being the swing in the direction of the main trend, and then the flag in itself being the retracement channel back to resistance levels. Okay, when trading a flag formation, it's important to understand that we are basically swing trading. Okay, basically we are looking to exploit a whole new swing in the direction of the main trend. That's why all the swing trading principles that I usually look for, such as a confluence of, well, first of all, of course, as usual, a proper moving average formation. Okay, all of them in order, all of them parallel to each other. All of them point in the same direction, the 100 moving average not being breached, the dynamic area of support and resistance being respected, etc., etc. Okay, you've reviewed all that in the first chapter of this course. And also, what we will be looking for is for a retracement back into that dynamic area of resistance. In this case, we overshot about 3 bars, I think, 1, 2, and then the third bar we came back down. You know, it's not a big deal. You know, you can have a quick pierce above, as long as you don't get many bar closes above, and as long as price doesn't get anywhere near the 100, it's fine. Like I say, as long as price dives back down into the right area of the dynamic area of resistance. Since we are in a downtrend in this case, we want price to fall below the dynamic area of resistance. Okay. So, like I'm saying, all the trading principles that we always look for to find in trending scenarios apply when we're basically about to trade a flag breakout. Okay, first of all, we must have a retracement back to the dynamic area of resistance in a trending scenario, and that will be signified by a retracement channel. In this case, is marked in blue. All right, right there, it's marked in blue. It is clearly a retracement channel. Price bounces down, up and down towards that area of resistance within this channel, and eventually, once meeting up with this area of resistance, well, the bears come in place once again, and the downtrend, the overall down market sentiment, does the rest of the job for you, pushing price in a new direction. Okay. And moreover, other than the retracement, what we need to see is a confluence of different elements of resistance coming around that area, that at the end of the day, holding price below, okay, basically working as many different elements of resistance clustering up together and holding this possible retracement before we see the breakout to the downside. In this case, what we see is, first of all, we have a Fibonacci retracement level, the 61% Fibonacci level, right to the pip, right there. Okay. Also, of course, the dynamic area of resistance, even though, like I say, it was pierced by 3 bars, not a big deal. And also, if I zoom out a little bit on this chart, we can clearly see that there is a trend line coming down at that level right there. Okay, right there, this trend line linking the top parts, the top swing, top peak of this trend. Then the next swing, and well, it comes, the price gets rejected off that level once again there. So basically, we have different elements coming together at that level, like I say. Let me zoom back in a little bit. Right there, take off the trend line, take off the Fibonacci. Okay, so we've determined that we have a pullback to the dynamic area of resistance, and moreover we have different elements of confluence. Okay, confluence of resistance above this, right above this level. If price breaches through as usual, the whole thing will be cancelled. However, if this level manages to hold price below, and from that the retracement channel gets broken in the direction of the main trend, we have green lights to search for a short entry. Okay, like any other type of breakout. Excuse me. Like any other type of breakout, the entry in itself will be given by the breakout, pullback, continuation pattern. This being my entry, this being my stop loss, and well, as you can see, price nicely riding for a new swing to the downside. Okay, once again, breakout in momentum. You see this breakout, long red bar down there. Okay, breaking below the retracement channel bottom. We have the breakout, then we have a pullback, retesting breakout levels. Okay, this is the breakout level. We have a breakout, pullback, retesting breakout levels, and from there we make new lows, triggering our short entry, stop loss as usual right above the pullback aspect, few pips above, 3-4 pips above, and from there, well, this is our entry, and from there we ride a new swing down. What about targets? Well, the targets are measured as per the pole of the flag formation. Okay, basically we measure the previous swing total distance, and we add it to the tip of the retracement. Okay, right where the new swing began, and it takes us all the way down here. Actually, let me draw that. Let me get the ball of this flag and project it onto the new swing, and there you have it. This level would be our our target. Right there, it's where it's met. Okay, you see that? We simply take the pole of the flag, we prolong it in time, and well, that level will mark our final target. Okay, very typical flag formation, like I say, very typical setup. It worked nicely. We had the a confluence of resistance right above that. Upon bouncing off that confluence, price broke down to the downside the retracement channel. From there we got the breakout pullback continuation entry pattern. We triggered our short entry. We measured our the full potential target of this flag formation. It took us all the way down to this level, and well, right away upon entry, bang, price met our target few bars later, about 7 bars later. So all in all, like I say, a very nice flag trade, a flag breakout trade. And that's basically it, really, guys. There is not much to say. Just simply remember that when you are trading a flag formation, you are trading a swinging formation. Okay, you've just gone through the previous swing, and now you are aiming to exploit the next one. Okay, once the retracement trend line gives way, that's your entry, and well, you try to make some profits out of it. But like I say, it's basically the same type of trading principles like any other trading trading area. Okay, imagine a flag formation. It's basically a range. Okay, remember on the ranges videos before, I was showing you how we would find a new swing to the downside into the congestion area. From there we bounce up and down, okay, and eventually the main overall market sentiment muscles price in the direction of the main trend, of course, and well, once we have the breakout of the lower band of the range, we get our entry, and from there we try to squeeze some profits out of the next move. Okay, well, basically the flag formation is the same thing. It's just a leaning range. Okay, do you see this range? As you can see, it's basically the same principle, but it's leaning. All right, it's not moving sideways as in ranges, as in range breakouts, but it's basically just simply leaning a little bit, okay, with a little bit of a slope. But like I say, the principles are still the same. You need the trend, okay, you need the moving averages to catch up with price. Once you get the breakout only in the direction of the main trend, if price continues moving against the trend, you don't take that trade. Once you get the breakout in the direction of the main trend, you wait your entry in the shorter time frames in the shape of a breakout pullback continuation, and from there you enter short, you place your stop loss, you measure the previous swing total move, okay, and add it to the tip of the retracement channel, and from that you project your final target. Very, very typical price pattern. Now I'm going to be showing you what a bullish flag formation looks like. Okay, we have one nice bullish flag here in this chart that I'm showing you right now. In this case is the Swiss franc, the USD against the Swiss franc, that being the flag in itself, this being the pole. Let me mark it in green. Okay, and as you can see, basically the same type of pattern. We have a nice uptrend, alright, as per the moving averages. We have a whole new swing move into the in the direction of the main trend, okay, making new highs. From there, price needs to take a breather. It retraces, swinging back and forth within a channel, within a retracement channel to be exact. Once you get the breakouts, you are good to go to search for a breakout, pullback, continuation pattern, and from there trigger your long entry and bang, off you go. Your stop loss will be set down here, and your final target, if you get the whole pole and you add it to the retracement tip, to the tip of the retracement, sorry, it will take you right there. That is where you would exit the trade, okay, at this level. So as you can see, it's a very easy type of trades, okay, very easy type of price pattern. In my opinion, it's not as reliable as ranges breakout. I still like ranges breakouts and flat bottom or flat top triangles better than flags, simply because since it's a sideways range, okay, or like I was saying, a flat bottom triangle. Imagine price coming from above. Once it gives a breakout, basically you enter short, hoping to ride a new swing to the downside. With channels, it's basically the same thing, okay. A price comes from above, enters a period of consolidation, and then it breaks to the downside. Well, in my opinion, the factor of having one clear horizontal level to keep an eye on, meaning that you have a clear level to focus on as far as the breakout and the pullback goes. In my opinion, it makes the entry much easier than with a flag formation, okay, or with a regular triangle, okay. When you have a regular triangle, since you have a sloping trend line, okay, the breakout, once you have the breakout, the pullback is not usually as clean as it is on a flat bottom triangle or flat top triangle if you're in an uptrend, of course, or in a sideways range, simply for the fact that this line that you want to break out from, it's sloping, okay. It's not as clean, okay. It's not as well defined than a horizontal line, meaning the bottom of the flat bottom triangle or the range bottom as well. So as far as I am concerned, it makes it a little bit more difficult to spot the entry, okay, or at least the right time to get the entry. When you have a sideways range, you know that anything below that level, as long as this level, once broken, it holds any type of retracement, okay, anything below that level screams bearish at you or bullish at you if you were in an uptrend, okay. But like I say, you have a very clearly defined level to keep an eye on. When you have a sloping trend line, it's not so easy to keep track where the retracement should go or not. That's where screen time, practice, and experience comes in. I mean, but like I say, in my personal experience, I prefer to trade ranges breakouts than flag breakouts. Anyway, nonetheless, flag breakouts, I definitely do trade them. Okay, it's just, it might be just a little bit more difficult, but still I trade them just fine, and they do work, okay. You just need a little bit more of experience to a little more of experience to profit from them. The good part about flag formations is that they happen everywhere, okay. Every time frame, every trend, you will see many flag formations. It's actually the most common of all price formations. Actually, in this very same trend, have a look here. We have a swing up, retracement channel. You see retracement channel, breakout, whole new swing to the upside. From them, another flag formation, another breakout, pullback, continuation, bang, a new swing to the upside. And then what do we have? Well, have a look by yourself. We have here another flag formation, another one. Here we have a tiny flag formation. Anyway, that tiny flag formation gives way to our main flag formation, the one we've just been we've just been reviewing on this video, etc., etc. But nonetheless, like I say, they happen so often. All right, so often. If you master this type of price pattern, well, you will definitely become a profitable trader. Especially as usual, because you are trading a breakout in the direction of the main trend, okay, and only once the breakout is being confirmed with a breakout pullback continuation. Like I say, flags formation, you're gonna become familiar with them because they happen so often, okay, so often that, well, it's the easiest to spot out of all trading patterns, because, well, have a look. In just one trend, we had 3 following swings, 3 following flags, okay, and therefore 3 following breakouts in a row that you could have profited from. Okay, every time they give way, bang, new swing to the upside. They give way, bang, new swing to the upside. It gives way, bang, new swing to the upside. So it is important to become familiar with flags, okay? They are so common that if you want to become a truly successful trend trader, you must get accustomed to trading the flags. All right. Alright guys, that's all for this video. Like I said, there is not much to say about flags because you are already familiar with the breakout concept, okay? Trading consolidation areas in the direction of the main trend upon a breakout pullback continuation pattern. We've reviewed already a few videos, and I don't want to, I don't want to get too repetitive. So nonetheless, go back your charts, okay? Scroll back in time, try to find all those healthy trends as per the moving averages, all right, all of them parallel to each other, in order, etc., etc. And once you find that type of price action, you will see, or try to find different flags, okay? I'm sure you will find many of them, okay? And I'm sure once you get accustomed to them, well, you will be able to make money just by trading them, okay? It's typical swing trading, always in the direction of the main trend. It's a very, very typical and very profitable type of trading, okay? Alright guys, that's all. With this video, we've reviewed the 3 types of price formations I tried myself: ranges, triangles, and flags. Sometimes they combine onto each other, sometimes they present themselves alone by themselves, and sometimes you get many, as in this case, many different formations in a row, one after the other one. I'm gonna be talking in more detail upon this topic on the next video, on the next part of this chapter, but nonetheless, like I said, those are the 3 main elements, the 3 main price pattern I tried: triangles, ranges, and flags. Always in the direction of the main trend, of course. I definitely recommend you to pay attention to breakouts. You could definitely become a successful trader just trading breakouts, okay? Alright folks, that's all. If you have any question, don't hesitate to send me an email. I will very gladly give you my feedback. Bye bye.